Which is better, TSLY or QQQY? They're going to fight right now. Let's go through the tail of the tape and see if we can get some clues as to which one may be better for our own portfolios. This is Mike, the Tactical Stock Scalper. All right. There are strengths and weaknesses with both funds. And because I'm not an ostrich, I don't stick my head in the sand. I like to know the weaknesses that are with my funds, but I also like to know the strengths. Let's talk about Tesla and TSLY. Okay, so we're going to start off with Tesla here because it is the underlying of TSLY. So here are some strengths of TSLY. It is way cheaper than QQQY, right? We got a price tag of $12.03 currently on TSLY. We got a price tag of QY at $18. So the yield on cost is way better right now with TSLY than it is with QY. So we got to give a point there to TSLY for that, for being cheaper and having a better yield on costs. But wait, QY wants to throw a punch. QY, what do you got to say? Well, QY, because the NDX has a diverse basket of stocks, right? Let's look at the NDX. The NDX 100 has 100 different stocks that it's boasting in its portfolio, right? So that is definitely a strength versus a single stock in this instance, because a diverse blend can really help you with downside protection and maybe some upside potential gains. I got a lot more to talk about, but if you like this kind of content, gently, please, just gently caress the like button. I would really appreciate you. Next, look at the slow, steady, predictable movement by NDX. Look, slow, steady climb. Yeah, we get a few days with the ripper in there every now and again, or we get a day with some big downside, like as you can see right there at that big red candle. Yeah, that happens from time to time with NDX, but a strength of NDX and QY is a slow, steady, predictable climb. On the upside, guys, Tesla does not provide a slow, steady ascent or descent. That sucker will rip one way or another. You just don't have that with the NDX. Here's another benefit for TSLY over QQQY. We got a year's worth of history on TSLY to really look at its chart and look at what it's done and really get a baseline of information. Well, we got over a year's worth with TSLY. With QY, we're sitting about 4 months in. So yeah, there is some information here, but the market has moved up drastically the last 2 months. And so we really just don't have a lot of information on QY. We do not know how it would behave in a 9-month downtrend like we do with TSLY, as Tesla has been on a 9-month downtrend. Like right here, look at Tesla, right? Since July until now, this thing has done nothing but create lower highs and lower lows, right? So with that being said, Tesla gets the nod for history. All right, let's talk about some risks now between the two. And I know Tesla bulls and TSLY bulls just despise talking about risk, but it's something we need to think about as investors, or at least someone like myself likes to think about. I want to know the risks of something I'm investing in. Okay, well, TSLY only follows Tesla, right? Well, that's a risk, guys. And we're going to talk about why that's a risk, because there's such a thing as earnings risk, right? Some of us, if you were in this thing, you felt the pain of this earnings as TSLY, okay, as TSLY dropped from 1350, at its lowest to 1074. And TSLY has never regained this gap fill right here from earnings drop. It hasn't even got to the gap at 1250 yet. Versus when we look at Tesla, Here's the earnings gap. It has now far surpassed the earnings gap and is up to closing up close to 260, holding 250 as support. So TSLY will feel the pain of bad earnings. And when you have bad earnings, and then you combine that with a dividend drop, and you get a double whammy, really knocking price down, that's definitely a risk for TSLY shareholders. Let's talk about another risk for TSLY. It is subject to market movement. That's all QY is. QY is all about market movement because it follows the NDX, right? Well, TSLY not only follows Tesla, but Tesla at times, right, is subject to issues with market movement, whether they're up or down. But since we're talking about risk, not only can the stock go down on its own, it can also follow market movements and market sentiment and bring it down. Let's talk about another negative. Now, this is also a positive. We're going to talk about it on the negative side here for a second with TSLY, and that is volatile, sharp movements. I mean, NDX, by and large, does not have sharp movements like this time and time again. Look at the candles, right? Sharp movements up. Look at this monster green candle right there. A few days earlier, monster red candle, right? A few days later, monster red candle. Later on, a month or so later, big green candles, right? Tesla has sharp movements up and down, but when it's down, that could really hurt it. What's another risk factor with TSLY that QY does not have? Well, the CEO, Elon Musk. Love him or hate him, the guy will say some stuff every now and again. He likes to speak his mind, and that can really hurt his share price or hurt the share price of Tesla. By then, of course, meaning it's hurting TSLY, right? So anytime bulls see Elon start to talk, you know they're pinching them cheeks, preparing for the worst. QY doesn't have, well, QQQ, the NASDAQ rather, doesn't have a CEO. It doesn't have those worries. Let's talk about some risks with QY, okay? Slower movement to the upside, right? As we talked about that being risk with sharper movements to the downside, okay, with TSLY, a risk and a factor with QY is the NDX, by and large, has slower movement up, which means that it can't get up quicker, as fast rather, as something like a TSLY or Tesla. It just doesn't move that way. It has a basket of 100 stocks. Therefore, it's going to be a much slower climb up. Let's talk about some rewards of TSLY, okay? Well, we just kind of mentioned that as a risk for QY, but this is great for TSLY shareholders, is a much faster upside, okay? And volatility to the upside. As we see Tesla here, just massive movements throughout time, right? Just massive candles, massive up candles. That's just something that QY cannot offer you. Here's something else. Potential. And I mean long-term potential. Just give me a second here and look at this chart. So we're going to pull out Tesla on a weekly time frame, okay? Tesla's all-time highs were way back here in 2022 at 414. It's trading at 252 now. That's a lot of upside potential. Now let's look at NDX. NDX is at its all-time highs, right? So the potential for further growth, yes, it's there for NDX, but Tesla has a long way to go to reach its potential and all-time highs. So TSLY definitely gets the nod for upside potential versus QY. Here's another reward of TSLY that QY just doesn't have. And that's that Tesla can introduce a wide array of new products. For instance, a doggone Cybertruck that Tesla is introducing. Well, there ain't no NDX Cybertruck coming, right? It's not going to introduce new products. Sure, it can bring in new funds to its system and eliminate, poor ones. Sure, it can weight its index differently, right? With different funds, put more into Apple, for instance, and less into Tesla, whatever it's going to do for its fund. But it can't really change the dynamics of the fund. Whereas if some really great products and new and innovative products come out for Tesla, it could really shoot it much higher. And that is definitely a reward for TSLY. Now let's talk about some rewards for QY. Well, we talked about one of the strengths, right? A slow, steady, predictable climb. And that is great. I mean, that is honestly fantastic. It's slow, it's steady, and that means that QY will actually follow the upside much better than TSLY can. Because if Tesla rips and TSLY is still selling 1% calls, okay, QY is going to move as equal to or better than TSLY. So keep that in mind. Now, of course, the fund managers can change how those options are structured in TSLY, but currently they're 1-2% out the money. Upside is really, really capped. And so NDX, the slow, steady climb, I like QY better on this. Let's talk about how they operate their funds, okay? QY sells puts that are cashed out every single day. So what that means is, and why it's a benefit and why it's a reward for QY, if we start getting massive downtrends like this, they can alter their puts day to day on percentage in the money, which means they can go really close to the vest and say, okay, we think we're going to drop hard here, and they can change that day to day. Whereas something like TSLY, they're doing week-long cover calls. Yes, they're selling some puts as well to create a synthetic position, but they can't really change those cover calls. I mean, they can roll them and do some things like that, but once they're in, they're in. So that means if something drastic happens in a week, particularly to the downside, QY, I think, will fare better. And I think time is going to prove this out. Will fare better than TSLY to the downside. So which one is better? Well, it really depends upon your plan, okay? And it's really, I think, up to you as to which one is better. This is Mike, Tactical Stock Scalper, out.